to 296 from BPP Practice and Revision Kit for ACCA FR. Here are the facts from these questions. This information are relevant to questions 292 to 296. On 1st November 14, this company purchased 75% of the equity of A company for 650,000. The consideration was 35,000 $1 equity shares in P company with a fair value of 650,000. So P company issued their own shares, their own 35,000 shares to A company to purchase 75% of A's A company's equity. That is important. Noted below are extracts from the draft statements of profit or loss for Port Company and its subsidiary Alfred Company for the year ending 31st December 14, along with the draft statements of financial position as at 31st December 14. So they have the extracts from P&L and statement of financial position. So they have this gross profit of this much 364 to 40. They have profit for 50, 30 and 96, equity shares of 200, share premium 585, retained earning 29,00331, revaluation surplus 30 and nothing. So that's what they have. All right. P company has not accounted for the issue of its own shares for the acquisition of the investment. So the information that they have provided, this does not include the issuance of 35,000 shares by B company to A company to acquire A company's 75% equity. Using the drag and drop options below, show the balances on the share capital and share premium. Okay, so we are doing question number 292 now. Okay, we are doing question number 292. What are they asking? Share capital and share premium. Okay, share capital and share premium. Okay, share capital. So 200 plus they have issued 35,000 shares of one value. So 35,000 uh, 35, they have 200, these are in thousands. Okay, so I mean they have this 200 plus 35, the numbers are in thousands, so all the numbers from here are in thousands, so this would be 35 because 200 they had, hmm, and they issued 35,000. Okay, or maybe we can do this question somewhere here. Question number 292, we are doing share capital and share premium. So this we can bring in here. So originally they had how much? 200, and they this is original equity, and then they do the issue of shares. Okay, so okay, just the original number provided. Okay, or before acquisition, maybe we can say before acquisition. And okay, so they had 200 and they issued how much? 35,000, right? And then they have 235. So 650, how did they overall they had 650 out of, I mean, the consideration out of which they, when they issued the shares, they issued the shares which fair value was 650 and 35k was the list price. So when they issued, there is an increase in their share capital of 35, and the remaining is the share capital, share premium. Sum of both these two is 650. That's how they issued it. Hmm? And before acquisition, they have the share capital of 200, and the share premium they had was 500. So 500, and then they issued how much? 615. So how much should be their total? This thing we will just add it. So the share premium will be 1115. Okay, so 235 and 1115. Do we have those options here? So 235 will be share capital, and 1115 will be the share premium. So that's for 292. Same way what they're asking for 293. So our answers will be these two. Okay, yeah, 293. What is the ask? What are the net assets of a company at acquisition? Okay, they are asking net assets of a the company. Okay, a companies at acquisition. A at acquisition. Okay, net assets at acquisition. So what they had total, we can look at this. They had this equity share, share premium, retained earnings. So they have this share capital, share premium, and a retained earning. It is of A company that we need to remember. They are asking about the A company is this thing. Share capital, share premium, they have, and then there is retained earning as well. This is important. So the sum of all these three will be the net assets. Okay. So we are talking about this company, A company. Okay. So their share capital was 100 because it is asking about at acquisition. Their share premium was 85. These are just the information from the question. And then they have this retained earning. So should we take all of it? Because this amount, hmm, and all of these amounts are at 31st December 2014 at the end of the period. However, the acquisition happened on 1st November 14. Okay. So here is a 2 month thing. Hmm? So for the 2 months is post acquisition. So 2 month thing we have to take out. So we will take this retained earning, then we will minus this for the 2 months. Okay, so we multiplied it by 2, and so what we are doing, it we will take 276. Okay, how we are doing is this 331 is for the full year, this retained earning. We will the 2 months is post acquisition. We'll just need to take 10 months of it. Okay, so we can what we can do directly, we can just go here, divide by 12, multiplied by 10. Okay, so 27 just for 10 months we will take. Okay, so these three things, wait a second, they have 31, we should not, I'm sorry, this, let me redo it here. So 331 is the retained earning. So this retained earning will increase by the this profit. Okay, this 331 plus 96. So 331 is their retained earning, beginning retained earning. Okay, and then out of this 96, they will take for 10 months only, right? They will take this for 2 months only. Um, so we will deduct. We need to calculate here, not this 80. We need to calculate the 2 months thing here. So this divided by 12 multiplied by 2. So 16 is the profit for these 2 months. So this 16 is post acquisition. Okay, so that we need to take out. Okay, from this 331, this is 16 is for post. 315 should be our answer. How we should calculate it here is this return earning we need to take. So we will take this 331 and we will minus uh, this 96 divided by 12 multiplied by 2. Okay, so that we will take here. So 315 we should take. Hmm. Because this 96, is the profit for the full year. Hmm. And after this, so they are asking how much is the at acquisition. So what we should do, we should deduct this 2 months of profit. Okay, so that's what we are doing here. Then what is question number 294? The accountants of P company is finalizing the consolidated financial statements. Which two of the following statements are true regarding consolidated financial statements? The NCI share of profit is part of the consolidated statement of profit or loss. NCI share of profit. So do we include that in the consolidation profit and loss? I think so, yes. Hmm. So we include NCI share of profit in the consolidated statement of P&L. That is right. So the first statement which says that NCI share of profit is included in consolidated profit and loss. This is right. Okay. This one is correct. What is the second one? Goodwill on acquisition should be amortized. Goodwill is not amortized. Okay. So this is not right. Hmm? Goodwill is not amortized. What is the third one? If a subsidiary is acquired during the year, its results are apportioned over the year of acquisition. Yes. I mean, results of subsidiary is apportioned for the year. Okay. So this is also correct. Hmm? If it is acquired. Only the group share of the subsidiaries non-current assets. No, all non-current assets are shown, not just the group shares. Okay. So all the non-current assets is shown in the statement of financial position. We will take the non-current assets of the parent and the subsidiary, and it will be shown in the consolidated statements. You will not take, your ownership percentage of the non-current assets of the subsidiary. So that is a false statement. So first and third are right. So this will be our answers. Okay. We will do 295 now. Okay. What is the amount of group gross profit? Okay. At this year end, group gross profit. Right. Is the group gross profit? Let's see. So there's some group gross profits. So see, 364 is for the full year. This is P that we will take. Okay, maybe we can reproduce this here. How we are going to calculate it. They have given this thing here. We are going to calculate this thing. So we will take all of 364, hmm, and we will add to this share, this 240 divided by 12 multiplied by 2. Hmm, this divided by 12 multiplied by 2, it will be 40, because you know then we will add this, like add this and this. So our answer will be 404 thousand. These all information are in thousands, and yeah, so our answer will be 404,000, because we will only take A share. So gross profit of P for the full year, and then 2 months, 2 months gross profit from A. Okay, because the post acquisition period is 2 months only. So our answer will be 404,000. Okay, what they're asking on 296. What is group retained earnings? Okay, so just to copy the format, I will paste everything here, then delete it. So they are asking 296 is what is the group RE? Okay, Let's see what is the information here. So they are providing this thing. hmm. So for and P and A, okay. So return at 2900 and then 331. So this we will take in entirety. 2900 we will take. hmm. And then what we are going to add is we have 75% ownership and post acquisition period. So we will take RE of P. With this we will not take. This is not relevant. What we are going to take is post acquisition profit. We are going to calculate. Okay. Maybe I'll keep it here. So A's post acquisition profit. So 96. You see their profit. A's profit is 96 for the full year. Okay. This is for full year. Hmm? Or that we can even simplify it here to say A's profit for the full year. Then we can say is profit for the post acquisition period. Okay, all of this should be increased. To simplify this, I'm breaking it even further. We can do it in a single cell. We can calculate it, but just to simplify it. So A's profit for the post acquisition period is how much? It's 96 divided by 12 multiplied by 2. So 16 is their post acquisition. Then P's share of 75% that they acquired. So for this 16, they will take the 75%. Okay. So what is the you know what is the group RE then? That is the question. Um, what is the amount of group? What is group retained earnings? So if we ask about group RE, hmm, so group RE now will be this 2900 and then the share of the post acquisition period from the subsidiary. So our answer will be 2912. Okay, these are all the questions. All right.